Hi everyone, this is Ali Hussein Kassim and this is Ali Talks Tech. So, if you are in the tech ecosystem or even in financial services, I'm sure you would have been following this interesting story coming out of Silicon Valley. And that's the collapse of the Silicon Valley Bank, literally the banker to the tech ecosystem in the US, and reverberating from there across the world. And we'll tell you how that is coming to be. Now, I've talked about this if you follow me on LinkedIn. I've talked about this Silicon Valley collapse over the last couple of days, and it really got me super interested to really try and figure out what the effects of this collapse might be for the African tech ecosystem. And what are the learnings that we can come out of from this particular saga that is still evolving across the US. Now, I've been doing some research, but one of the most interesting things that is coming out very clearly is the almost tied to the hip relationship between Silicon Valley Bank and Y Combinator. Now, for those of you who may not know, Y Combinator is the most interesting, most famous, and most successful tech accelerator in the world. Every accelerator in the world wants to be a Y Combinator of their region. So I've been doing some research, and I want to first show you some interesting stuff. Did you know, and this is not from Ali Hussein, this is from Silicon Valley Bank and Y Combinator. I'm just looking at their website on my laptop. The Silicon Valley Bank website has a URL, svb.com/account/Y Combinator. Let me read some interesting statistics for you guys. 11 of 15 Y Combinator startups with IPOs bank with SVB. So SVB is the short acronym for Standard Silicon Valley Bank. 11 of 15 Y Combinator startups with IPOs bank with SVB. That is serious, guys. Those are some serious statistics. 7 of those began with SVB startup banking. So, as I was digging into these super interesting stories at the background of what was going on, I stumbled upon a super interesting study that was done by a company called Intelligence by TechPoint Africa. Now, Intelligence sort of follows YC alumni in Africa. Now, let me read for you some interesting statistics from this report. 95 African startups have participated in YC's accelerator program. Now, these numbers are as of March 2022. 51 YC-backed African startups are from Nigeria. 1.3 billion was raised, that's dollars, not naira or Kenya shillings, was raised by YC-backed African startups. 86% of YC-backed African startups were accepted into the accelerator program in the first 2 years of their establishment. YC-backed African startups have employees stand at about 6,193. On average, a YC-backed African startup has 2 founders. On average, it takes an Africa startup 15 months post-launch to get into Y Combinator. Whoa. Only 19 YC-backed African startups have individually raised up to 10 million and above. These are interesting figures, guys. Now, the million-dollar question everybody has been asking, including myself, is what will be the ripple effect of the SVB Contagion across Africa? We can discuss this in many ways, but for me, the one thing that is super important is what are the lessons for us? Again, if you followed me on LinkedIn over many years, one of the key things I have always talked about is a solution that is African in origin for our tech ecosystem. And that's not to say that African tech startups should not accept foreign funding. That is to say that we have to have a healthy mix of local funding and foreign funding. What we are facing, in my humble opinion, is what I call the Berlin conference moment in African tech startup ecosystem. What's the Berlin conference moment? This is something I coined in reference to the scramble of Africa Berlin conference of the late 1800s in Berlin, in Europe, Germany. Why is this important? This is important because we, again, let me repeat this, we must have a healthy mix of funding that is African-based and foreign-based. So we don't have a situation where we have tech startups in Africa that are majority owned by foreigners. Let me make myself clear. I have nothing against foreign-owned capital. I have nothing against foreign-based VCs and private equity funds. These groups will continue to be welcome. They form a super important part of the tech ecosystem across Africa. However, we must start asking our governments what it is that they are doing to ensure that tech startups across Africa have more and more local funding. Let me give you an example of Kenya, my home country. The pension schemes across this country, championed by the National Social Security Fund, have billions of dollars that can be invested in different sectors of the economy. There is a small percentage of that can go into more high-risk investments like the tech ecosystem. My thumbsuck research tells me that if we do that, we'll probably have about $200 million available every year for tech funding in Kenya alone. Now, if you extrapolate that across Africa, you start getting the picture and you start understanding how important this discussion is of Africa-based tech ecosystem funding. I want to close today's conversation by, again, urging everybody to look at this ripple effect that is currently happening and appreciating where we are coming from. What are the learnings that we have gained and will continue to gain in the SVB Contagion, as it's now being called? And I want to close by saying that this is my first weekly roundup. I'll be hoping that I will be having a weekly roundup every week on Thursday or Friday of every week as we move along. Thank you for watching and thank you for listening.